Introducing the 3-part options course with Hans Albrecht. Get access for free by scanning this QR code or clicking on the link in the description.
Hey, greetings everyone, and thank you so much for joining us. It is Macro to Micro Options Power Hour. I'm Samantha LaDuc, founder of LaDucTrading.com, joined by Hans Albrecht, and he is on the West Coast, I'm on the East Coast, and we're all just waiting for Trump to speak at the Rose Garden. This day is kind of important on a lot of different levels, even though most don't expect much from it. I actually am really thinking this is a big stage for Trump to either follow through on his threats or to weaken. And if he does not follow through because of whatever reason, then he could be absolutely seen as a weak leader and lose a lot of negotiating points and leverage. So one of the things that I have been thinking about very much is the reason for the season of these tariffs. And we've heard lots of different reasons, right? We've heard he wants to have other countries remove their tariffs against us, meaning the US. Seems like a noble cause and seems very fair and seems like, he could pull that one off. But then he used a whole bunch of backdrop of fentanyl coming across the borders. That was a really big reason for Canada and Mexican tariffs, regardless if Canada was to remove their tariffs against the US, which was intonated this morning. So while he was also speaking against a backdrop that said Canada is not for sale, Trump has also said he really wants the revenue. So he wants to do these tariffs in order to make money for the US. It's a negotiating tactic to annex Canada. I'm sorry, you are there and you hear all the hubbub. I really think it has a lot to do with the timing of the 2017 tax cuts getting extended. And in fact, his GOP does not have the votes to actually pass this. So it's very, very interesting that at the same time they're about ready to vote on the tax cuts and the debt ceiling, they are actually also negotiating tariffs on the same day. So it's very much a political stunt. And there are tons of other reasons, corroborating evidence that we can pick, and everyone has their own little mantra of what works best. But ultimately, I do see Trump following through on tariffs, long story short, and this is one of the big reasons for my continued thesis that equities will be under pressure. 2025 will be the year of volatility, and that we will have a lower dollar and yields over time. I'm talking about US 10-year. So for right now, we're waiting on Trump, basically, regardless of what happens today on the global stage. We have not really gotten through is this channel of chop. And in fact, when we titled this on Monday, Mercurial market turns chaotic, it's because we really have gone nowhere fast, but underneath the surface, it has continued to weaken. So Hans, I wanted to kind of throw it over to you after kind of getting through that. Yes, it's tariff day, but we don't have a resolution on that just yet. And then, of course, the market has bounced since the Monday gap down, which is kind of typical oversold behavior. And we made it right up into my 5690.62 level, which was actually an hourly gap fill. So now what? Where are we going from here?
Well, I think it was, again, as to be expected. We had this big downdraft. We ran into the freight train. We reversed back down, as was probably to be expected on a technical basis. And then we kind of ran through the collar strike. So we talked about that JPM collar. So we ran through that collar strike, which was inconsequential up around 5,800, but suddenly it made a big difference again around probably 5625, 5630. Suddenly the deltas start rising on that put. Dealers have to sell. Everybody else has to sell. Everybody front runs. And then sure enough, here we are. We went down and made those new lows. And I put out a note that day saying, I thought the next day would be, we'd get more stability, because once that disappears, you're taking away some of that negative gamma, that sort of accelerant, that sort of fire starter type situation where the market really needed that to kind of get restructured. So now there's that new collar. It's out there. It's not making a difference in any possible way. But the new collar actually has people, basically there's some deltas to sell, so they have to sell the market down a little. And
can you show that one, by the way, because I've got that chart just in anticipation of you discussing it. So here we are. So it's
the collar. Yes, the collar heard around the world. Yes, that's the big collar. So they've got a few different versions, but it's over $20 billion of notional, and that's pretty big. That's a lot of positive gamma that comes back into the market. So that was a little bit stabilizing once that disappeared, right? So whether this made a massive difference or not, it's a piece of the puzzle these days, with these things being more important than ever. And so that was it. So we sort of cleared the table a little bit, had a little bit of a bounce in there. And I think, but you're still seeing quite a bit of steep skew on the index side, on the individual stock side. So that's what could actually give us, maybe before we resume a trip down towards 5,000, potentially we get a little bit of a move back up. Just if they take, it'll be interesting to see how much vol they take out of this event, because right now you can see the vol's exceptionally high compared to normal, particularly going into Friday's data and everything. We're seeing sort of higher than normal. So that's what I'll be watching. What is that? What's the option pricing doing after today? If it relaxes, it's going to tell me that this was the event that we were waiting for, and that the rest of this week will be of less consequence, which I'm not sold on. I think we've got Powell, we've got some more data coming out, jobs, claims. And so that's going to be important as well, because of course now, if we look at some of the things that we showed last time, which was this expectation of December versus now, which was no landing to hard landing, we have gone right to the other side, which is worried very much about this growth scare, worried about unemployment potentially
Speaking of a
rising.
growth scare, Trump announces U.S. reciprocal tariff plan, says that he will sign it in a few minutes, and it will be reciprocal around the world. So there might be some more details, devil's in the details, but basically he is saying we will implement the reciprocal tariffs, and they'll see what the market is doing as a result. Nothing, totally going nowhere fast. All right, so while they work all that out, I just wanted the latest news. Okay,
Yes.
go ahead, continue.
No,
Sorry.
we
And
need
I
to
had
know.
I had a screen share up. I don't know if you noticed that, but I wanted to get your opinion on that, because it looked a little bit like the calls are still not very bid, but they've had lots of time to kind of get protection into this event. Would you agree or not?
They have been, and especially in areas like the Russell, we're trading around a 99th percentile on skew. So people are very, and one interesting thing is we're seeing very high correlation on the sell-off. So there was one, I think in maybe the same report that you've got there, they showed the Russell being extremely highly correlated, which tells you that this has been a sell-off where there have been few places to hide, right? So everything kind of getting pulled down together, which is maybe indicative, of course, outside of maybe some unique defensive areas, maybe indicative of truly that growth scare where it's sort of like nobody wins in a sense, and that's not great. And that's been part of the problem for the Russell in general, right? Because we can see that probably back end of the year we're going to get some rate cuts that should be okay in general, but I know you have some views on that too. But generally, the Russell could very well benefit from something like that if we do ultimately get those. So I think that's an interesting place to maybe position in something like that. Not because I think it's fantastic, not because the Russell is the greatest place to be when there's a downturn in the economy, but because the money's got to flow somewhere. Money just, I mean, it can go to the sidelines, I suppose, but it generally has to flow. We're seeing it do that in energy. Even though oil is probably going to $50, at least temporarily, we see energy being the big winner on the year at this point. So in fact, that's a place where I think maybe some downside put spreads could make sense, because you've got extremely high skew. So one of my favorite trades right now is downside put spreads in energy, in areas like gold, which has just persisted higher, but we're seeing unusual skew shaping, meaning those puts are very, very expensive versus calls, which is not something you normally see in gold. So I think there are some interesting plays out there. What did I put on today? I put on downside 1x2 in gold as well to take advantage of that skew. So you're buying one put, you're selling two lower. Now it is a higher margin play because you're technically going to own some gold all the way down, but it gets you in sort of an average around GLD 266, 265, which I think is not bad considering we're up around 286, and it's only a May 2nd play. So we got about a month. So I think that's a nice way to play the downside. You buy that 285. Let me take a look and see what I did here. You buy that 285 put and you sell the lower, but twice as many. So you're selling twice as many to help finance that long put. And that makes the trade kind of interesting. I wouldn't say those kinds of trades are necessarily hedges. So some people say, oh, that's a great hedge. It's not really a hedge. Anything that leaves you short options net is kind of not really a hedge. So I would really hesitate to call it that. But if you can kind of accept that within a range of probability, you're either going to do well on the portion that does hedge a little bit, but worst case scenario, you end up owning the product lower. That's kind of an interesting trade to me, especially if it takes advantage of some of the volatility.
I'm showing you
aspects.
right now the market reaction because it's going to help that gold short. So here is a 2-hour kind of heat map of the key indicators that I watch anyway all day long for clients and show it as well. Here's gold over here, continuous contract, forming a nice little head and shoulder here. Dollar is also dumping. This is very much my theme of money going home. Very, very, very much my theme of money going home. We have the Qs right here. You can see they're elevated. They're already pushing 480, 481. And we already just talked about the skew where calls were cheap and puts they're really protected. So now they're kind of unwinding that. You can see SPY is also pushing above. And the next level is where we actually got rejected. This is the pre-market, just for those who are 47.83. That's where we actually rolled over very, very strongly. So this is basically the level, and you can't see this right now because SPX is only regular trading hours, but I'm just gonna giving you that level is that's where we're likely headed back to in the short term. But kind of getting back
57.83, 57.83 is that?
if this follows through. But the most
Yeah.
important thing is what the 10-year does. And the 10-year clawed its way back. This is what I said for clients this morning. Let me just show this, that this 10-year yield had to get back above 4.2 in order for equities to get supported. If this rolls over, they will not. So this is very positively correlated right now, the 10-year yield with equities. So long story short, we got our little pop here, relief rally on actually Trump following through. So if he had caved, it would have been not so good as it relates to, again, kind of credibility and such. So what he negotiates from here in regards to tax cuts and is yet to be seen. That's one thing I have to really watch for, and I can't do that while I'm listening to you and also anything else going on, is will he walk them back? In other words, how many minutes before he softens the blow? All right. So there you go.
I don't know. I don't know if you probably can't put too much into this after hours move, but
true. Thank you very much. Yep.
Yeah, I think you want to be careful here trading in the after hours. But I will say that in my view, that the sort of table had been cleared by that caller to some extent. And I think you've sort of had a very big push down in growth. It almost feels like it could be, because it's been sort of a highly correlated sell-off. I think there are many places that you could kind of play this bounce in. It could be a little bit in growth. It could be in some other things like the Costco's, the Netflix's. I mean, Costco's high beta, but it's kind of hanging in there. Now, I wouldn't be getting into Nvidia. I'm still not sold on getting back into semiconductors. Those charts just look too bad for now. Power gen looks a little bit interesting to me. Maybe like a VST, maybe GEV, something like that to play the bounce. But I think there are many places where this could kind of unwind. And so one of the things that we often look at is the leveraged ETF kind of synthetic gamma that is always interesting. And you just talked about how those upside calls are cheap. They've been hammering them. Call setters have been hammering that upside. And then of course we ultimately, and when that happens, we end up with a focusing too much on the left tail and forgetting about the right tail, which is one of option trader, vol traders sort of favorite kinds of situations where the downside is too expensive. And I mentioned 99th percentile for Russell, equal almost as high in many other areas, and particularly in single name. So if you start this, you can get into the more complicated second order Greeks like Vanna. If you start to compress VIX and volatility in general, you could get a little bit of a tailwind from some of those out of the money puts kind of compressing. That's your Vanna push. We could have a situation where people need to unwind hedges and start pushing up. And then on top of that, the CTA and vol control space is kind of in buy mode. It's been in buy mode. The vol targeting in particular, because we're dropping, and we talked about this maybe last time or before that, we talked about how we're going to lose some of those really ugly days that we had.
Oh, that's right. Yes, thank you very much. Yep.
As that realized vol comes down, they start to reallocate. And if you look at, let me see here, we're kind of arguing for a bounce here. And look, this is what it is. It's a trading environment. I mean, we've changed our mind, but we've been calling this pretty well. You got to be able to change your mind and trade this market. Otherwise, if you just want to be an investor, I've got accounts where I've just been adding some longer term holdings. I've been chipping away at stock. I've been chipping away at some leaps. Am I early? It's quite possible that I'm early, but in certain names, I'm comfortable grabbing exposure because you don't often get 10% sell-offs in markets. And I think some areas look pretty good, but I think you do have to be selective, right? Are you going to be jumping into something that does have a good profile in a potential slowdown? slowdown, or is it going to be one of the usual suspects that is just, like a semiconductor that is just kind of sitting in purgatory right now, and it may get a technical bounce, but how far is that really going to get? So I've been adding things. I've even been adding to some, little bit sort of things like Tesla, where I'm not completely sold on Tesla, but I
Yeah, he
do
did
believe
say,
that.
by the way, 25% tariff on all foreign-made automobiles effective at midnight. That's inbound. So, your
So
BMWs, your Volkswagen, your, et cetera, that aren't
So
made
it's
here.
as expected, right? So far, everything
Yes.
as expected, Samantha?
I'm trying to listen and also check that up too, but it looks
Right.
like a baseline tariff rate of 10% for all countries, which is lower. It's more tiered or staggered, which is better for the market to absorb. It's still a hit, there's no question, but it is not 25%. It is 25% on inbound foreign-made automobiles. So that's going to be
Yeah.
tough. But anyway, keep going. Futures, by the way, just for those in the Q land, let me just show something real quick. Remember when I just said that this is the Q's aftermarket over here? Doesn't show up. Forget weekly and daily on this. It is literally right up into that 481.71, that big thick line. That was the hourly price target. So we just tagged that after hours on this announcement. And as I mentioned already, I can't show it to you, but SPX also already hit and is moving on up. So long story short, it is a rally until he puts his foot in his mouth.
Yeah. Anything on Canada? Because I love my fentanyl, and I'm not sure I want to give
Oh,
it up.
stop it.
I do. Look, I put it in my cereal every morning. So let me put this back here. So here's your volatility,
Boy Scout.
vol control, kind of low allocation, lowish allocation. Not like, the end of the bear market there back in the end of 2022, but low, kind of near the lows of where we've been for the last couple of years. So, a lot of these kinds of things have sort of de-risked and maybe need to re-risk at some point. And so what happens is if we see this short-term vol, which got crazy expensive, right? We saw near those August highs, some measures, if you look at the ATR, average true range, were even much higher than last August. So there's been some pretty neck breaking vol lately, even though we haven't seen a VIX over 30. So it's been somewhat orderly in the VIX space. But if we start to see things start to calm down a bit, this is what you get. So it's kind of this neat chart where if you understand how these funds work, if we get a little bit of a rise, there's buying. If we get a little bit of a sell-off, there's buying. But if we get big rally, then there's a little bit of selling, right? So if volatility and upside volatility counts, so if we get too big of a move to the upside or too big of a move to the downside, then that's where things get a little questionable again. But remember, this is one piece of a larger puzzle.
Take a look at, remember how we have talked about going into backwardation?
Yes.
Okay, so this is just a reminder, and I know it's after hours and such, but when we triggered backwardation, this was back in the yen carry trade, convexity rally, and then that was December 18th. It was very quick. But this was when we triggered backwardation, SPY lost 8.5% from that level. So not before, but actually from that level. So anyway, it was interesting. But right now we're trying to get back up. So this is where we are right now. Not very convincing, not very strong, but it is after hours. Any thoughts on that?
Yeah, so that's definitely, if we were sort of to come up with a little list of things that we'd like to see before we can feel that the coast is clear to the upside, that term structure is very important. Right now, it's not happy. It's not our happy picture that we like to see, but it's been very whippy too, right? When we rallied to 5,800, we were fully back into a very sort of nice contango, very beautiful. So, if you got sucked in there, that's why this is just one piece of it, right? If you looked at the term structure, you would have said, hey, all in, let's get going again. So, but right now, let's see if this has been backwardated lately, which means that front month futures higher than the May, which was higher than the June. This part's okay. What we're probably going to see tomorrow is that the VIX is going to drop, the futures aren't going to move too much, and then we may get a little bit of that contango left. I like to see that. Another thing that I like to see is, let's take a look at a pretty cool little easy one for people to look at, which is if you monitor the VIX 9-day versus the VIX. So I know you have versions of this too, Samantha, and you look at 3-month and VIX and all that. So we look at Samantha loves to look at the different time spans. This is quite short, 9 versus 30 basically is what you're looking at. And we saw the other day, we saw a little push above 120. And then again today, we saw a slight new high. And when you see a move above 1.2 in this ratio, that's where things are getting a little bit panicky. Can they get more panicky? Well, here's August. Yeah, they can get pretty darn panicky. But 120 to 130, people are a little panicked out at that point. They've sort of had they've had enough from the perspective of this measure. So I'd like to see this come down more towards 1, where it's a bit even to start with. So if we see this down in the low ones, that's going to make me feel better. If we see that VIX term structure that I just showed you start to move into that nice upward sloping curve, that's going to make me feel a little better. Now, in terms of levels, what would you want to see? You see that we could almost hit 57, was it 57.90?
83.
57.83. Yeah. So, but in your view, Samantha, if we get back up there, is this another instance of what we talked about a couple of weeks ago or last week, which was we're running into the freight train again, where it's the reality declining earnings, certainly probably not too many CFOs having much good to say about the outlook. And maybe part of that is going to be kind of posturing and pressuring and, wanting to kind of put pressure on the president. So, there's some of the data that I'm looking at is actually not that bad, right? So I'm trying to figure out for me, and I think this is important. If you just kind of dig a little deeper into what has happened with confidence, because we've seen business and consumer confidence fall off a cliff. That doesn't necessarily mean that nobody is spending a dime and that it does mean that they're probably not spending, but they're not. It doesn't mean that they are tapped out, right? So I think there's a distinction to be made between there has been a shock event that makes businesses go, okay, let's put everything on hold. There has been a shock event that makes consumers go, okay, let's put everything on hold. Hold on, let's not book that trip. But if we start to see a little bit of visibility, a little bit of something that might be comforting from this in this tariff situation, people will go back and spend, because as long as they're working, they are going to spend money. This is what we do. So I think there's going to be this sort of really noisy data period where we're like, what the heck happened here? Everyone pulled forward demand because they wanted to get ahead of the tariffs. The economy's been paralyzed for a moment because Trump is,
You're making such a valiant effort to explain this away. And while you're doing it, I'm laughing out loud while I watch the futures market just dump after it literally taps some key levels and then just completely implodes. Why? Because the man is Mercurial and it turns chaotic. So he's like, they're half as much as the other countries' reciprocal tariffs. They're going to be 10%, so the more he talks, the more he puts his foot in his mouth. And look at this. It's just done a whoopsie.
The best is when he says, if you do business with somebody else that we don't like, we are going to tariff you.
No, this is actually, if you buy Venezuelan oil, then we're going to double the tariffs. Well, that's all of Asia. Anyway, so we really, really do have a mercurial master who is turning the markets chaotic, and it's very hard to know and why. It's not hard to know. It's very hard to know what the end game is. Like I said, we get some 5 top reasons, and some of them could be just pure politics to get his 2017 tax cuts extended, where right now he does not have the votes. But ultimately, we do not have a very confirming market reaction to this announcement. It is completely and totally upside down. It was going to be 10%. It was known. It was a certainty. And now he's talking it back. And as soon as he talks it back, the market plummets. And I have this one line that I keep saying every single day this week. The longer we have uncertainty, the more bearish the outlook. Every day in my live trading room, the longer we have uncertainty, the more bearish the outlook. And this is exactly what he's pulling again.
Yeah, that's the problem. That's the problem, right? Yeah.
Let's move on. We got to get some finalization here of what this really looks like. I am very confused. U.S. is to impose 17% tariffs on Israel after yesterday Israel said they would not have any tariffs on the U.S. And I also mentioned big whoop. It equals $11 million, not billion, annually, 11 million. It's nothing. It's just not important. Okay, so we've got Tesla and the rest just upside down. All of a sudden, 46% tariff on Vietnam, according to Trump. Where'd that come from? Okay, 58% tariff on Pakistan. So we definitely do not have a light reaction here. Qs have just plunged 2%. The other thing, 25% on South Korea, 34% on China. Woe is me. 24% on Japan. Okay, yeah, market's going to tank. I mean, Japan is really just not up for this. They really, really are not up for this. And 20% on the European Union. So there we go. So what I've got right now, so here is your gold that has obviously stopped going down. The dollar has also temporarily stopped going down, but big picture, I'm a big bear on the dollar and yields. Yields have been frozen. Oil has already kind of done its shake and bake, but this is the big reversal. As soon as the numbers came out on the individual countries, Brazil 10%, Pakistan 30, Sri Lanka 44, Switzerland 31, Cambodia 50, you get the point. We did a full-on reversal, so not across the board tariffs, as they were leading us to believe. And then basically currencies are having quite the day with this as well. So I was just going over how these prior bumps here in currency land have completely reversed, and obviously Qs are down 2% and they're falling further. So yeah, so we definitely have an unfriendly backdrop. I just wanted to kind of show it here. It's a little bit easier on the pre-market. So what was interesting about that is, remember I had mentioned the backwardation really wasn't changing very much. There's something else that's moving higher that I want people to be really, really aware of. And it was funny because it was a soundbite last time where, you were reciting Bloomberg that said credit spreads are fine, so carry on. And I've been showcasing that credit spreads are not fine. In fact, I did a big report for clients talking about dollar and yields. And my very last chart was, in fact, credit spreads saying, this is what I showed last month, beginning of the month, where I said, this is the one chart that keeps me up at night, this very protracted downtrend, and this is high yield OAS. It looks very much like it wants to move higher and NASDAQ wants to roll over. Well, fast forward a month and we are here. So this is already, by the way, yesterday. No, this is the first. This is 3 days old because the first is actually a day delayed. This is not real time, right? This is just your stock charts. Anyway, so the point is credit spreads are absolutely starting to expand. And one of the things that I said for clients that are, trying to figure out the whole fixed income space and bonds is that it's really also very tough, because are we going to get a steepener or are we going to get a flattener? And very much will depend on what happens with the tariffs. All right, so there's bonds taking a little hiccup here, and this is the flattening. So they're coming back in. And yields right now, it doesn't look like much. I don't know. I probably have in this software is just not moving. They're frozen. The market, however, is not. We have a very solid forced kind of liquidation right now on this uncertainty removed. Now, the interesting thing is gold hasn't sold off, but it is also a collateral trade. So I always watch for that as a sign. When we do start to get selling in the precious metals, that's where we actually get into risk of crash mode. So we can crash from oversold. And when gold starts to reverse lower, that is typically one of my kind of signs. But moving
it does.
along,
It happens. I remember in many crashes, gold will outperform eventually, but in the short term, it's going to be a source of liquidity.
Correct. Yeah. So watch for that. If your gold short is a great idea, still think, but it's really tough into these events, right? So is positioning. Everyone was just like, yeah, that's my man. He followed through. And then, oh, wait a minute. So we don't really have the market reacting right now calmly. You can kind of say that. And I can see a lot of folks, and by the way, this is my whole thesis. This is a big top. So whatever he came out with today was going to be very, very impactful as it relates to his presidency, his leverage, and what he's trying to accomplish. First and foremost, these tax cuts. Second of all, lower dollar and yields, because it's all about balanced trade. Yes, fentanyl has been used as a negotiating tactic, but it's not the reason. And currency, power of revenue generation from these tariffs is on his mind as a way to help offset debt. And I don't think that this is going to go away. And I warned about this. I really feel like there's going to be tariffs, even pre everything. If Trump was to get elected, we're going to have tariffs. There was no doubt in my mind. And part of his whole argument is in order to force this consumption and investment locally, then he's going to have to get the dollar down and yields down. And part and parcel is tariffs. The other part is forcing money to go home. So the money that is invested in the US market is absolutely being told right now, front and center. We only sold off 10%. You got out. This was all selling, right? Even this report that I just did, I still don't see any buyers stepping in. I don't mean this particular day, but I'm talking about big picture. And I can go through some of those charts if that would help. But for right now, the market has come right back down to where it dumped into the 31st pre-April Fools. And everyone's wondering, okay, what's the next shoe to drop?
Yeah, that's the thing. thing. I thought that maybe defense had run its course a little bit. It was sort of, I've been showing some staples and things like that versus the S&P kind of a little bit on the stretch side. That theory is going to be tested today, tonight, and tomorrow, that's for sure, to see if there's any chance for a little bit more beta-y type stuff to come back. It certainly doesn't look like there's been a lot of relief from this event on the outside, which is what I was hoping for. I was hoping for kind of a tariffs are kind of I've always thought of, even back in January, I thought, well, the problem is you've got this front-loaded problem with the tariffs, taxes, et cetera. All these other benefits are kind of the back end stuff. So how, all we need to do is get through this sort of period of the front-loaded part being an issue, and then the market at some point may look towards the back end and go, oh, there's some positive things coming that are a bit more slow burn. But at this point, as you say, the longer this goes on for, the more damage it does to the economy.
Yes.
And the wealth effect is a very real thing, right? You're already seeing some dents in the wealth effect, and that's that may not affect the lower 40%, 50% of people who've sort of been in a recession for years already, in a sense, or have had very difficult times. But it's going to affect the people, the spenders that really matter to this economy, and these incredibly wonderful profit margins that companies have been able to take care of. So now you've got all these talking heads on TV going, well, tariffs are going to be okay because all we have to do is raise prices, but it's going to be up to companies to figure out, well, how much will consumers tolerate? How much of an increase will they tolerate? How much can these companies absorb? So they're in a little bit of a conundrum, there's no question.
Well, it is going to be, and I hope very much now that we have at least a decision, he is going to follow through with the tariffs. Now we have to really unpack what are the exact reciprocal tariffs. And I don't mean, 49% on Cambodia and 46% on Vietnam and 36% on Thailand, but relatively speaking, what is happening with our major trading partners, Mexico, Canada, Japan, China, EU. All of this now can be worked into models, and we didn't know it before, so now they can actually start and re-rate equities. Now, I would always warn that this is very clear a trade, that it's good for exporters in the US and very bad for importers in the US. And I remember this morning, actually the past 3 days, retailers have been popping up off the ground like daisies, right? So we've had that stabilization in the gap down on Monday, and they're chasing Macy's and they're chasing I don't know what else. And I'm like, this is not a safe trade. If tariffs are going to follow through, they're going to be hammered. Any company that gets a majority of its inventory from China, long story short, it's good for US based, consumption focused, capex focused manufacturers and service providers, and it is bad for US importers, full stop. That's basically the trade in a nutshell as it relates to balanced trade. So with that, go ahead.
And that's it, right? So it's a matter of figuring out. There was the idea, and I always look at things from a volatility perspective, but there was the idea that the not knowing was difficult, but now the knowing that even though there isn't anything surprisingly positive about this, it's just knowing that you can start putting pen to paper and figure out, as you said. So analysts be able to kind of go, well, okay, this is before this. Everyone sort of goes, well, I have no clue. I can just throw my hands up in the air, and that's an amount of uncertainty that markets don't enjoy very much. As long as you can kind of get to a point where you're like, okay, this is going to be about X percent off of our profits or whatever that might be that you're looking at, then we can kind of move forward and just agree on, okay, this is what the market multiple should be. So I'm hoping that kind of plays into this. I'm not going to read a ton. I know this is a big pullback in the after hours, but I maintain that we'll see tomorrow. We shall see tomorrow. And certainly we do have a lot of data coming up.
We do have this amount of data. And
stop raining on my parade, Samantha.
I'm sorry, but I cannot still in good conscience be recommending small caps, not now, not ever, with this type of backdrop. No. So this is the problem, right? We have to have resolution, a positive resolution. This is going to be a while before we do. So I would just say be careful, because there are a lot of small companies that are going to get hit hard on this. And in fact, anything that was en route is, as soon as it hits US shores, it will have that tariff attached. They had no power over this, right? When they ordered this stuff 6 months ago, 3 months ago, and then it got made, and then it got put on the boat, and it's still not here. It could be a container of stuffed animals to give out at a charity. It doesn't matter. They just got hit with the tariffs, and that's not worked into the price. So yes, it is going to be find the companies with the large margins that can absorb this, and then we'll work from there. But for right now, growth is not in play, and value is going to get hit. Brings me back to backwardation. It looks very much like we're going to stay in in, oh, wait a minute, ES future options just got halted? Okay, so yeah, we're having a little meltdown here after hours, then
Yeah.
unhalted. So the
And
liquidity is a question. Let's just put it that way. It's very dangerous out there if we're having the futures market close like
wow.
forced. Flash crash
Yeah.
was 3 times as big. Okay, we haven't had any flash crashes, but we definitely have dropped 1,000, NQ points from the high. And at some point, we should get a little bit more clarity here. But
Well, that's been the concern. This kind of highly correlated sell-off in some areas has been a concern because that really points to there being no place to hide. And that's coming to fruition here where there really aren't very many places to hide. So unfortunately, I'm still holding out hope that we've got sort of a little bit of work to do the rest of this week to see what happens.
Yeah. I mean, we're right back to the 31st. So we've wiped out 3 days of gains, but that candle is an expansion candle of size. That's what we're going to be watching. And obviously, bonds and gold had already been bid up in defense, in protection mode. And by the way, all of my intermarket stuff says the same thing. Bonds are going to outperform stocks. They've narrowly eked out some gains over equities this quarter. And it was the worst quarter, oh my goodness, in the second quarter of 2022.
Yeah.
And only 10 times in NASDAQ history have we had a drawdown of more than 5%. So there was a big hit to it. There's no question about it. And I would contend we've got more to come. But today is a little bit special. It is a knee-jerk reaction after hours. They can control that whole liquidity scene. And right now we even have dollar moving higher, which is part of that risk off mode. So let's see what we can get after this week is done. Like you said, we've already had the flattener. We've already had bonds and gold bid, a lot of shake and bake in equities. Let's talk about protection because last time we actually talked about how April 2nd risk was not priced in, right? That was literally the title.
It wasn't. It was very cheap and it very quickly readjusted higher. Yeah, it was very, very cheap. I'm not sure what they were thinking, but we saw a really big steepening of the whole term structure, particularly around that particular date. And so at this point, I think you've got the high steepness, you've got the fairly high implied volatility, high option pricing. I think you've got to go with downside. I don't even love downside flies as much. I think, you're short some Vega, which isn't that great. But I think you just have to go, just like we said last week, use the KISS method, keep it simple, downside put spreads to achieve, basically like the JPM caller, just put on a downside put spread. And again, this is, as I've been telling students and members, this is an environment. I don't love selling calls with markets making all-time highs. It makes no sense to me. But in this kind of market, you can fund a little bit, even though we've seen that downward pressure on the call side. I think you're getting that higher option pricing that you can use to fund some of that downside, because there's no question downside protection is not cheap right now. That is a problem.
All right. And we have a little other problem, which is currencies right now are freaking out. So this is something that we won't really feel until tomorrow and such. But the point is, when we get some currency volatility, that can absolutely seep into equity volatility. What do I mean by that? Dollar yen falling, for example, it means yen gets bid with bonds, which can also trigger some of that basis trade unwind where they have to sell the very important stuff. And then they basically just concentration risk de-risking. But we can also have some events that are in retaliation, which we can't really see because they're the gray swan. For example, a yuan devaluation. So China doesn't like what's going on here. They've threatened that they will retaliate, and then they do. And some of the retaliation that I've read about of late is related to not just what Trump had signed back on February 21st. Remember that we joked about this, but I was up late, literally until midnight, reading an executive order that Trump had just released. And I basically said, this is a no-go for me, which means China plays had been very, very, very undervalued. They had risen. It was a beautiful trade in BABA and KWEB and FXI. And I said, no more, because he's already intonated that he's going to put a kibosh on U.S. investment in all things China. But they hadn't followed through with anything, with any policies or regulation. And then Besant came out a few weeks later and said, yeah, I'm looking at that. Our department, Treasury, is looking at ways to limit U.S. investment in all things China. It was the same concept. Well, then China came out on the 23rd and said, we actually, if anyone threatens our trade, we actually have now the power to take their intellectual property, their physical plants, their cash in our banks. That's news. That's retaliation. Would they do it? Who knows? But they passed. It's a thing. It's a retaliatory measure that they're putting in place to say, if you really do follow through, Trump, April 2nd, we've already changed the laws. That is not put into any of the risk models as it relates to, think Apple, think of all that manufacturing, all of that.
Oh my goodness, yeah.
Dependency in China. Yeah. So they came through and basically said that. Now, US investors didn't see that headline anywhere. It's me looking for it. So
right, we can count on you to do the real digging, Samantha, and that's it, right?
If Apple is down 5%, as an example, Apple is down 5%. We're just talking about that.
Yeah, 213. There you go. There's some realities coming to the forefront here, which is the gloves are off and everyone else is going to say, okay, you want to play that game? We're going to you want things to get nasty. Then things are going to get nasty.
All right. Wow. So we have some selling after market, and not sure if or when Trump will talk it back, but there will still be a very bullish bent for many who see this as stuff on sale. Just be smart about it, because we still have, like I said, I can see anyway from all my stuff that there really has not been buyers that have come in to support at the baseline levels. In other words, a market is a top, and I can see when they come in and stuff starts to break down underneath the surface, and I can do my growth value stuff and stock bond ratio stuff and, you know, my rate differential stuff, and all of it shows that they're stepping away, breadth is breaking down, net selling is picking up, even if the price action isn't showing it. And then all of a sudden we get an air pocket of risk, and the price action shows it. And then I look for buyers to come back in. I look for breadth to expand. It isn't just value that, you know, saves us, or energy got bid up, because of course it's not going away, and because it's also an inflationary hedge and just war vibes. But the point is, we have this kind of tacky stickiness to buyers not leaving. That's important. That's what I look for. And I don't see that yet. I don't see buyers coming in to take up these lower levels yet. So maybe we do get a solid sell-off, and it becomes just too good to be true going into earnings, where the bar has already been absolutely revised lower. So we know this. For 13 weeks in a row, 14 weeks in a row, earnings expectations have fallen. So as a result, that bar is going to be easier to get above. But their guidance also was very poor for 2025. So they were like, yeah, we're crushing it. Our margins are, you know, people are still spending, but we don't know what the economy is going to look like. So we're guiding lower, and stocks got creamed. So now this is really going to be the test. Earnings are coming up. Banks always kick it off. I don't think it's going to be a safe backdrop for strong earnings guidance, but they might still beat. The big ones that I'm watching, of course, are NVIDIA, because it's too long in the tooth of them holding on to this AI demand, when China has already come in and taken a whole bunch of lunch boxes away from them, beaten them up. And I really think that this Netflix also has some susceptibility to rolling over. And I like Spotify. Those are my favorite shorts, but Spotify and Netflix are at least coming from a place of highs. Netflix has already kind of really softened hard, I should say. 106 from 150 is where it's been, you know, underneath that 116 for 6, 7, 8, 9 months.
NVIDIA. Sorry, Samantha, you said Netflix, you mean NVIDIA?
Oh, I meant NVIDIA.
A place that's already been clobbered a little bit. You're right.
Exactly. So the high flyers to me that haven't been clobbered, Spotify and Netflix, long story short.
Right. And that's what they do, right? They're going to rotate out of the things they're up some money on just to do what they can, right? It becomes, I have no choice. I have to raise money. I have to, you know, it becomes more of a liquidity event, which I'm looking at some of these names, you know, Shopify, there you go, down $10. That's exactly what you're talking about is, you know, little companies going to take a hit, tariffs affecting small goods, small items, you know, a lot of crap that comes from overseas and you know, and sort of cheap goods type places. So this is kind of turning a little bit ugly. I don't know how tomorrow might be a special day.
No, I think that's a good way of putting it. I have one of my edge clients who's been very long the China plays, and he's up a lot. He's up a few million in his BABA. And we were talking about it this morning going, you're crazy not to get protected into this. Like, seriously, lighten up or you know, get some protection, because sure, maybe China does stimulus. Sure, it's still a great story from an undervalued position, but a lot of stocks in China right now are going to be at risk of both US and China coming out loggerheads and trying to tap down investment in each other. And you don't know when that could possibly come into play. So literally, he went in today, thank God. I'm looking at BABA after hours, looking at KWEB and FXI, and they're all rolling over. Not a little bit. They've been going sideways for 6 weeks. They just broke their 10-week, which is the trend long trigger that I have. Anything happens, anything above 10 weeks, good. Once it starts to break down, bad. So he loaded up on BABA puts and SPY puts to protect his position. That's what you have to do. You have to do that because you do not know what this Mercurial man will do.
Yeah, no, he's not. He has no offer of a put. He is not extending the put olive branch out to us right now.
Oh, wait a minute. Canada, Mexico, not subject to reciprocal tariffs. What is he doing?
Because we're nice people. We're nice people.
You're sweethearts. Okay.
That's right.
Let's see what happens here. I want to see the dollar loonie is still dumping. Wicked. No, by the way, this is a big theme of mine. I think the dollar loonie pair trade for anyone who does currencies, done. Totally going to roll over on a trend time frame. Same thing with the dollar. Oh, I'm not showing you the peso. What I was going to say was Canada. What's going on with Canada?
Yeah, no, we've got problems. He's going to put, well, that's going to help. Otherwise, we were heading to recession.
Yes, it's really going to help. You know what? Which stocks it's really going to help? Home builders and Home Depot not to dump. So remember a conversation we had like a month ago, whatever it was, and he says, I'm going to hit an additional 25% on soft lumber for Canada. I'm like, wait a minute, they already have 15%. So that hurts. That's a 40% hit. Home Depot, their number one line item is 2x4s. So anything with home builders, anything with Home Depot is going to get hit on Canadian tariffs. Now, I just saw a headline that said Canada and Mexico will not have reciprocal tariffs. I got to dig into this, right? But the point is, if not, that is very helpful. He's basically trying to unite this continent. Long story short, yeah, it's exactly what he says. For now.
Yeah, for now, exactly.
Canada, Mexico, not subject to reciprocal tariffs for now.
We'll see what happens in next week's episode of The Apprentice. We'll see. It is rather maddening. It'll be interesting to see how VIX reacts. It's been rather sort of muted, a little bit muted. I wonder if this is the thing. I mean, we do have to break. We got a little bit lower the other day. So if we get below those, and it certainly seems like there's enough selling to kind of, I mean, I'm looking at some of these names, Meta down around 561, 562. We have not seen that. That's a good $150 off its fairly recent high. Almost $200. That's almost $175. So yeah, there's some big damage being done here. It's something to behold.
All right. Well, we're definitely at the whims of the Trump administration pushing tariffs. There's no question. The question is when we can get certainty about the amount and the rollout. So right now, we've got some evidence here that they are definitely following through. So he has not caved. He still needs those tax cuts and the 50 votes and the GOP and all that jazz. So we'll see what happens, but not for Canada or Mexico. And can I tell you, I bet that was a negotiation. I bet you anything, because the senators, the folks that are most hit by the Canadian tariffs are the ones who were speaking out the loudest to Trump, saying, I'm not going to get reelected in 17 months.
Yeah.
You're hurting us. I bet you anything. This is all political. This is completely political. He wants his 50, he wants his tax cuts pushed 2017 continued at come hell or high water. And that's why he's letting Mexico and Canada go right now. No guarantees once he gets that vote. But for right now, that's how it works. Rest of world is getting the brunt, and that means China in large part.
All right, Samantha. Wow.
All right, that's it. We're done. Yes, we're trying to kind of sit back and digest this, but after hours, we definitely had some liquidity issues. And from my read, those expansion bars are serious. Also, oil is also selling off. Dollar is going home. We haven't fallen apart, believe it or not. In other words, we haven't taken out the lows from gap down on Monday. So there is that. We definitely have yield curve is flattening, and that is going to kind of speak to more falling yields, which is a growth scare, which is recession risk pulled forward, which means bonds are still bid as defense. Gold is definitely, extremely elevated. Watch currencies tomorrow, like the dollar yen, the loonie, the peso. But for right now, we've got some stabilization, a little, not much. And then, of course, I'll be watching backwardation because last time we went into backwardation, markets fell, SPY fell another 8.5%. So if we stick that landing, we stick in backwardation, we could absolutely have another 10% drawdown. Long story short.
Yeah, we could. And we were talking about the low 5,000s as a potential spot, those August lows. Maybe that's where, the multiple seems a little more right than it is here. I mean, really up to about a week ago, the ex-Mag 7, this market was barely down for the year, which is pretty amazing. I sort of thought that was kind of amazing, either a sign of incredible resilience or just kind of the way that sometimes when there's a big crisis, equities are kind of the last to sort of go, oh yeah, there's a problem. So it may be a matter of that instead. But anyway, we will see what happens. It's going to be interesting. I don't know. What do you think? Well, can Powell put a positive spin on this, or
but I have this Powell capitulation thesis. I feel very convinced. And I know Jeffrey basically says he doesn't have to. They are taking out Monday lows, the Russell 2000. Thank you, Doug.
Wow.
So Jeffrey does not think that we have to cut aggressively. Long story short, that they're kind of finagling the higher tariffs as a way, instead of fiscal austerity. They're not going to get fiscal austerity. You know this. But that is literally the hit that we have to take in lieu of fiscal austerity. So if we do fiscal austerity, we're going to trigger deflation. That's not good, period. Not for the economy, for jobs, for the stock market, the whole thing. Tariffs, we can have a debate about this. And I know it's already after 5, but the point is, I still see very high likelihood for a Powell capitulation. Maybe June at the latest, but I definitely see lower yields. That's a baseline bet, and a Powell capitulation. So we'll see what happens. But either way, market's selling off, and we wish you a better day.
See you, folks.
Cheers.
Thanks,
Bye.
Samantha. Bye-bye.
Subscribe to LaDuc Trading YouTube channel for more macro to micro options power hour and other content.